Welcome, friends. Uh, Welcome to Proficient, and this is Shumoy Goswami. And today it is 28th of April 2018, and this is our weekly webinars. Today we will be talking about present market condition. We will be talking about equities, commodities, and currency markets in our India and in the global perspective. In the past 2 weeks, we have been talking about various aspects of moving averages, and I hope you have got some good food for thought for creating your new trading system based on moving averages. I wish to give you some more ideas on innovative use of moving averages, probably in our next webinar on next Saturday. Right. So let us come to today's topic. We are coming to our Indian perspective, but let me start this week's presentation with US markets, which is the S&P 500, the US indices, right? Uh, as you can see from my chart, from this chart on my screen, that S&P 500, this is the daily chart of S&P 500, and you can see that there is no major trend. There is no major trend, and the previous uptrend has been the previous uptrend, which formed our top in third or in fourth week of January, has been disturbed a bit, but the market has not decisively taken a downtrend. That I can tell because, as you can see, in second week of February and in first week of April, S&P 500 had twice tried to violate the 200 DMA, its 200 DMA, but its attempts have so far been failed, right? It has not given any significant close below its 200-day moving average. At the same time, we can see that the tops are getting lower, right? Look at the top here. I am showing you. Suppose look at the top on 26th of June, and look at the top on 26th February or 9th March or around 18th of April. Look at these tops. These tops in S&P 500 has continuously been lower, right? So what we are seeing here is a series of lower tops and at least two equal bottoms. So this gives rise to what is called a descending triangle pattern, which is a bearish kind of pattern, but this bearishness will come into play only if the 200-day moving average gets broken, or specifically this particular bottom, that is the 2581, the bottom made on 2nd of April, gets violated. If this bottom gets violated, then we will have a classical downtrend, and where we will see the series of lower tops and lower bottoms. So that will be more confirmation of long-term downtrend in S&P 500. But that does not mean our Indian market will also be weak, because quite contrary to the global perspective, although the global perspective have been very weak lately, and also the prices of dollar has been rising because all these dollar index, and let's see what is happening in dollar. So this is the dollar index, and this index has been made. It is a the US dollars have been performing against 5 other major currencies, which are its trade partners across the globe. So this is how dollar have been doing lately. The dollar index has seen quite a significant rise, quite a significant strength for the past 2 weeks, and after creating a bottom at around 88 to 89 region, it broke its 2-month high at 90.5, and right now it is on the verge of challenging its 200 DNA. So we have reasons to believe that the dollar index will continue to remain strong, and the long-term downtrend is coming to an end. Keeping that view on dollar index, that is, dollar index will continue to go rise. What is likely to happen in commodities? Right now, I have opened the chart of crude oil, and as you can see, there is a significant uptrend in global crude oil prices, and on Friday it closed at $68.1 per barrel. And this uptrend in crude oil is really fueled by the downtrend in dollar index, right? That so far has been the case. But the downtrend in dollar index is nearly exhausting right now. And if that is the case, then crude oil will find it difficult to keep making continuous new highs from here, right? Already there is a slight bit of topish formation in crude oil, and if the chart suggests that if this bottom gets broken, say for example this bottom, the low is 67.11, and this bottom, the low is 67.14. So roughly we can take the mark of $67. Right now crude is $68.1 per barrel. If $67 gets broken for crude oil, then chances are higher that it will come lower, right? Crude oil will come lower if $67 gets broken. And in our Indian context, as I can tell you, I have seen from the chart of MCX crude oil, and the corresponding price is 47.70, right? Right now in MCX, crude May contract is being traded as the current month, and it has closed at 45 region, that is 4,545 rupees this per barrel. If 44.70 gets broken, then chances of sell-off will intensify in crude oil. So that is equivalent to $67 in NYMEX, right? Now, what is the chart of gold like? Let us open the chart of gold. Okay, this is the chart of gold. Yesterday it closed at $13.23 per ounce, and right now this is a strong support zone, multi-month support zone, suppose 1310 to 1325 region. But if dollar index keeps rising, then just like all other commodities, just like crude oil, gold will also see a significant sell-off, and If 1310 region is broken, then there will be trouble for gold. Okay, let's see if that happens. If 1310 gets broken, then prices will likely to come down, right? So that's the perspective in gold. And upper region, support, upper resistance level is at 1360, and lower support level is at 1310 to 20 region. And gold has been trading in a choppy region for past 3 or 4 months. So having given our weekly opinion, our weekly analysis point in US market, in US dollar, in crude oil, and in gold, let us come to our Indian markets, right? I'm starting my analysis of Indian equity markets with Nifty, and here you can see the daily chart of Nifty. This is updated till yesterday, 27th of April, and yesterday's closing price was 10,692. Okay. Now, you may wonder what are the oscillators that I have kept in the upper portion of my chart. There are 2 indicators. Actually, I have explained all these indicators in one of my previous webinars on moving average. So I'm just reminding you, giving a brief introduction, what is all about, what is these indicators all about. The blue one, the blue indicator, I have named it as Proficient Moving Average Rainbow Bullish, and the red one, I have named it Proficient Moving Average Rainbow Bearish. These indicators are actually a certain property of moving averages, and these indicators are showing the slope of the moving averages. I have taken a rainbow of moving averages. I have taken a series of moving averages from 50-day moving average to 40-day moving average in steps of 2. So for example, 50, 48, 46, 44, 42, and 40. These 6 moving averages I have taken. And when all these moving averages are sloping upward, right? Sloping upward means today's value of the moving average is greater than that of yesterday. That is sloping upward. When this condition is being satisfied for all these moving average, the upper indicator, the moving average rainbow bullish indicator, gives a value of 1, right? Both these indicators give either the value of 1 or the value of 0. Now, when all the slope of the moving averages are upward, the bullish rainbow indicator gives me a value of 1. And when the reverse is occurring, that is when 1 or 2, or all of them are not sloping upward, that is they're sloping downward, then it will give me a value of 0, right? The reverse thing is true for the moving average rainbow bearish indicator. That is when all these moving averages, the 6 moving averages that I told you, all these moving averages are actually sloping downward, right? By the term sloping downward, I mean today's value of the moving average is less than that of yesterday's value. When that is occurring, then the bearish moving average rainbow indicator will give me a value of 1. And when any 1 or 2 of these or all of these moving averages are not sloping downward, then it will give 0, right? Now, what does it all mean? It means that when the bullish rainbow indicator gives me a value of 1, that is all the moving averages are rising, that is the beginning of a new uptrend. And this uptrend remains valid as long as, until all the moving averages are sloping downward, right? This is how I have tried to attain robustness. Say, for example, on this particular day, on 5th of March 2018, this bearish moving average rainbow indicator, it was at a value of 0 initially, and this bearish moving average indicator has given me a value of 1. So on this day, I will say that on this day, all the moving averages are sloping down, right? So that is the beginning of a new downtrend. And this downtrend remains valid unless the reverse happened. On this particular date, this happened, which is on 23rd of April 2018. The bullish moving average rainbow indicator gave me a value of 1. That means on this particular day, right, on this particular day, all the moving averages slope became upward. So official uptrend started from here according to this indicator on this particular day, right? After 2 or 3 days, suppose here after 2 or 3 days, this indicator again returned a value of 0 here. Here it is again returning a value of 0, but this value means nothing, right? Because the bearish rainbow indicator is still at 0. So this uptrend remains valid. This uptrend will remain valid unless the bearish moving average indicator will give me a value of 1, right? So this rainbow bullish indicator will keep oscillating between its value of 0 and 1 every now and then, but that will mean nothing unless the bearish moving average indicator gives me a value of 1. The uptrend continues, just like here, as you can see in this particular day, right? In these regions, yeah, just follow my mouse here. On these particular days, the rainbow bullish indicator actually returned a value of 0. This only means that some of the moving averages are not rising upward, right? But that does not mean all the moving averages are sloping downward. So until all the moving averages are sloping downward, the uptrend remains valid, and that's the point of achieving robustness. So as you can see here, that on this particular day, the moving average signal turned into bullish, and the overall uptrend started here, and this uptrend continues. So this is our opinion on Nifty, and we are not basing our judgment on any particular X factor that we are not explaining why we are saying Nifty is in bull trend, right? Yes, it is true that Nifty is above its major moving averages of 200-day or 50-day. Yes, that is true, and that is also another reason. But we have created definite indicators to say this, right? And one more thing I would like to draw your attention to, and that is that here, suppose this was the top of past 2.5 months, right, on Nifty, and yesterday Nifty has successfully breached this level. This is a bullish case, and not only that, it has broken out with a breakout gap, right? This is a breakout gap. Here you can see this is a breakout gap, right? So this kind of Breakout gaps suggest that prices are more likely to go higher and the uptrend is likely to continue. So that is the point. Nifty is continuing in its uptrend, and chances are high that we will see higher prices going ahead, right? Having said that, we have to consider which sectors and which stocks are most likely to outperform if Nifty continues to go higher, right? I have seen that Nifty FMCG index is actually trading at its lifetime high, right? Look at this index. Look at its January top. Nifty is still now quite away from its January top. January top was made at around 11,100, and right now we are at around 11,700. So Nifty is right now 3 or 4% below its all-time high. But this FMCG index is actually trading at its all-time high. So this is called outperformance, and FMCG stocks are really outperforming, right, the overall broader index. So in FMCG stocks, what are the potential candidates to buy? I will show here two stocks in FMCG sector that are the most probable candidate, best candidate to buy. First one is Dabur, right? Look at the chart of Dabur. Dabur again has closed at its lifetime high at 366.45, which is above its January top on closing basis that I am saying. So it is outperforming here, and the longer term primary uptrend is quite evident from the chart. This is the weekly chart of Dabur, and you can see the series of higher tops and higher bottoms. So without much saying, I can say that Dabur is a long-term buy candidate. It has been outperforming Nifty for a long time, and we recommend to buy Dabur first of all. Another FMCG stock that has got our attention is Britannia. And look at the chart. It does not require any explanation, right? The long-term chart is exceptionally strong for Britannia. Okay, I know that because the price is too high, 54.60, not many people can afford this stock to buy. But still, Britannia is a very good stock to buy for the long term, and it has been making new highs almost in a regular fashion, and yesterday's close was also at a lifetime high. In a very short term, one can place a stop loss at around 5,300 region or 5,250 region, that is 200 points, 200 rupees lower than here. But even if that stop loss is triggered, it doesn't mean anything, right? On every dip, Britannia deserves a buy, right? Okay, it has stayed in a choppy phase for some times. In this period from November to February, it has stayed in a choppy phase where Nifty was moving up and moving down violently. In January, Nifty moved up. In February, Nifty moved down. But Britannia did not show that much of volatility, which is good. And in February, actually, Britannia has shown a rise, as you can see from the chart. So it remains a relative outperformer. and we recommend buying Britannia on every day. For very short-term traders, stop loss is 52.50. Right. The next stock that comes to our attention is again ITC. ITC is not that much outperforming lately. As you can see, it is still quite away from its lifetime high. But lately it has been showing strength, right? It has successfully gone past its 200-day moving average. The red one is the 200-day moving average, the red moving average. And this region of 285 happens to be its 6-month or 7-month highest point. So if it goes past this region, that is 285, right now it is trading at 279, the chances are very high that it will reach this much, which is 295 to 300 level. And if this level is successfully negotiated, then I can tell that the previous high of around 350 region will be challenged by ITC. So it is a comparatively longer-term player, longer-term trade, not as strong as Dabur and Britannia, but also in the longer term, ITC remains a good bet from the FMCG sector, which actually happens to outperform the market. The other stocks that catches my attention from FMCG sector is Jubilant Food. And as far as I can remember, I have shown this chart in one or two of my previous market update on some particular Saturday. And I had showed you that this particular consolidation phase, which occurred in February to March of 2018, will hold as a strong support for Jubilant, and any movement above 2285 that occurred in 3rd week of March should be bought. And right now Jubilant Foodworks is trading at 25.50, right? And just to look at the chart, it is again much like Britannia or Dabur, or even better than Dabur, that it keeps making new high every now and then and deserves a buy, right? So Jubilant is our next pick from this sector. And for very short term, one should keep a stop loss at around 24.30 region and take a buy position in Jubilant, right? Now, one stock that, now these 4 stocks I gave you from the FMCG sectors. These 4 stocks are mainly Dabur, Britannia, ITC, and Jubilant, right? Now I'm coming to another sector, which is finance sector. Actually, PSU banking stocks have been very weak nowadays, right? Even tell about SBI, suppose SBI have been very weak. But there is a double bottom formation to the right of this chart, and if 232 is not broken by SBI, then chances are high it will show some rise from here, but that is insignificant. Overall trend is down. So PSU stocks have been very weak nowadays, but that is not the case for private banking stocks, right? You can talk about Yes Bank, which is very strong. Yes Bank has posted a great result on Thursday, and it has again come to its lifetime high. Well, the trend is not as clear, but definitely it is above its 200-day moving average. And if this stock, which is at 366, taken out, then prices will continue to go higher, right? Private banking stocks, I'm not recommending Yes Bank right now, but I am do recommending you Bandhan Bank, right? This is my long-term recommendation to you. And this is a new entrant to the stock market. This is the daily chart of Bandhan Bank, which made its debut only on 27th of March. So only just 1 month ago, it has made its debut. But the stock is already showing some good strength, and it has made a bottom after making a top at 540 odd levels. It has retraced by 10% and made a bottom at 490 odd levels, and from there it is again trying to rise, and right now it is it has closed at 506. So at this point, if we take a trade in Bandhan Bank, then we will have a very favorable reward to risk ratio. The stop loss will be here, the last bottom made at 489. And if this bottom is not broken, then chances are very high that it will go past its high made on 12th of April, which is at around 535 region. So I'm do recommending you Bandhan Bank for a long-term buy. And from finance sector, I am also recommending you Cholamandalam. I had earlier mentioned this stock in this webinar, and the stock has been making significant momentum and upwardly moving, and with normal pullbacks. And all these pullbacks should be taken as opportunities to buy, right? So on Friday, yesterday, it closed at 1736, and this bottom at 1562 was the last made low. Probably if this bottom is not broken, then chances are high that the stock will continue its upward movement. So one should buy Cholamandalam on pullback with a stop loss here, right? So this is again another stock from finance sector. Another stock from finance sector is Dewan Housing, which is DHFL. So DHFL, I would like to draw your attention to the monthly chart of DHFL, right? And look at the chart. You can see the long-term primary uptrend for this stock, and there were 5 consecutive months of pullback starting from November to March, and on April, what a resumption, what a strength it has shown, right? And the primary uptrend, it is being resumed, right? So this chart shows us that Dewan Housing is another strong contender to buy. And on a short-term perspective, one should keep a stop loss at 584 region. But that does not mean anything. Even if this stop loss gets triggered, one shall try to entry. One should try to entry at lower prices, because Dewan Housing again is a very potential long-term buying candidate. So these are the stocks from finance sectors. So I gave you few stocks from FMCG and few stocks from finance sector to buy. And before I conclude this session, I will also like to draw your attention to some of the weak stocks, those stocks that you would like to sell if in case market goes lower, right? First candidate is Bharat Electronics, right? You can see the long-term downtrend here in Bharat Electronics. The series of lower tops and lower bottoms are quite visible in the downtrending chart. And last top was made at around 138 region. Right now it is trading at 133. So any pullback to 137 or 136 region will be sold, can be sold with stop loss at 139 region. And in that case, target will be 130 region. And if 130 is broken, then even lower prices are possible, right? Energy stocks, some of the energy stocks like BPCL, BPCL is also in a longer term downtrend, and after making a new low on third week of April, it is pulling up a bit, and the downtrend is very valid, right? Nearest resistance is at 412 region. Current market price is 390. So if it keeps rising, one should sell it on rise with stop loss at 412, and the target will be 370, right? And telecom sectors have been exceptionally weak for quite a long period of time. As I had told you earlier in this webinar, I had earlier shown you this chart of Idea Cellular. The longer term downtrend is quite valid here, and on Thursday it made another strong sell-off. It showed another strong sell-off and made a new low. So right now it is trading at 68, and even one could sell on rise here. This line with the stop loss at around 73. So if it rises, one could sell at 70 regions or 71 regions with stop loss at 73, and this 67 region will become the target. And last but not the least, from telecom sector, ARCOM, the Reliance Communication, is remaining equally weak. So it is again another selling candidate, and the bottom, the significant bottom was made on December of 2017 at around 11.50 region. This is a valid target for this downtrend, right? So right now it is quoting at 16 rupees 16, and rupees 11.50 is the target. So any pullback could be sold off with a stop loss at 20, and profit target, long-term profit target will be 11.50. So here I gave you the overall perspective. Overall view in Nifty is bullish, and I have gave you strong stocks in FMCG sectors and strong stocks in energy, in finance sectors to buy, and some weak stocks in energy sector, and in telecom sector to sell, right? I hope you have enjoyed the session, and you will explore these charts on your own, and will come up with new trading ideas. Thank you for watching this video. This video will be posted on YouTube as well. You can give your recommendations, or you can give your comments there. And for any query, you can give your questions there, and I will try to reply to it. Okay. Thank you very much. See you next week. And next week our topic will be a continuation of moving average. Whatever we have discussed about moving averages, we will try to build down from there, and we'll be giving you new ideas on moving average. So thank you and goodbye for now.